Has AMC made any progress? And if they have, what is it going to take to say without a doubt they are successful? That's what we're going to talk about in this video, going over my full thoughts on the Q4 and full year 2024 results. Let's get right into it. As I was getting ready for this video earlier this week, I realized that the operating cash was an issue that needed to be covered separately, so I did put a video out on that yesterday. If you missed that one, go watch it because you'll want to know how it's going to affect Q1. And I didn't really want that to distract from talking about Q4, the full year 2024, and what I'm going to be watching with AMC for 2025 and 2026. Moving on to thinking about the full year 2024 results and the future, I think that the quote that I have on the screen here from Adam Aron in the conference call is one that everybody should kind of keep top of mind. He said that we're still not where we need to ultimately be, but real progress has been made and is being made. And that's kind of what I want to spend the next couple minutes with you thinking about. Is that a true statement? Has progress been made? And what areas need further progress for the company to be successful? You guys have all seen by now the press release from AMC earlier in the week going over the Q4 results. I did a prediction video back on January 11th when Q4 ended, using my spreadsheet model to give us a best guess of what I was looking for on revenue, net income, and I even tried to add in free cash flow. Let's see how I did. In my January video, I estimated that total revenue was going to come in at $1.324 billion. The actual number was $1.306 billion. I was off by $18 million. Getting a number that big, that close, I am going to take that as a big win. My model predicted that the GAAP net loss would be $139 million. The net loss came in at $135 million. $4 million difference, another win for the spreadsheet model. Free cash flow for Q4 came in at a positive $113 million. I've been experimenting with trying to predict the free cash flow, and I had it at negative $50 million based on the box office and net loss. However, what I learned through this process of experimenting with this is that I neglected to think about the timing of cash flows. And if the box office is really big at the end of the quarter and they don't pay the bills till the next quarter, the timing could be off. So I think that I'm going to be correct when we add up cash flow from Q4 plus Q1. We can guess the general direction based on net income, but I don't know that it's worthwhile to try and predict an exact number for a quarter due to timing and management discretion. I'm not sure that in the future I'll be trying to make exact free cash flow predictions, just general statements. Starting off with some good news, when we pull the numbers from that press release into the slide deck here, we can see that every single item from Q4 2024 beat Q4 2023. Now, stop your typing. Don't put a comment yet and say, but this, but that. We're going to talk about the bad things too. Don't worry. I'm just want to highlight that Q4 2024 was better than Q4 2023. We're going to get to the rest of the stuff, don't worry. Q4 2024 total revenue came in for the quarter at $1.31 billion, that bar on the far right side. And you can see that in general, we have a revenue trend that is moving up and to the right. Although, as we know, it's not quite as high as we want it to be just yet. Moving into the full year 2024 results, the industry, as you guys probably know, dealt with a actors and writers strike, suppressing revenues in Q1 and Q2, but the industry came back really strong in Q3 and Q4. Net result was that 2023 slightly beat out 2024 on total revenue. And AMC did have a net loss for 2024, but it was less than 2023. Adjusted EBITDA better in 2023. And the other improvements in 2024 is that the operating cash used was less, only 50 million negative instead of 215 million. Free cash flow also improved in 2024. On this page here, we just have a comparison of the box office 10 years to AMC's revenue for 10 years. Box office needs to improve about 32% to get back up to pre-pandemic levels. AMC's revenue still needs to go up about 17% more. The expectation for 2025 box office right now here in February is somewhere between $9.5 and $10 billion. And then all of the movie exhibitor CEOs that I listen to anyways have said that they are expecting 2026 will be back to pre-pandemic box office levels. There are a couple of high-level things that I just want to impress upon you guys, things that I watch, profitability being one of them, and EBITDA is one way that we can measure that. The chart I pulled shows EBITDA at positive 310 million. AMC reported adjusted positive EBITDA of 343 million. The number is not super critical. It's more important to note that it's flipped from negative to a positive. However, I do also want to point out that EBITDA does not include servicing the debt, the interest payments that the company pays every quarter, which have been for the past 2 quarters around $112 million. So what is that? Interest annual payments of $448 million. We have a problem here, at least a yellow flag. Anyways, if the EBITDA is not greater than the interest payments of $448 million, we're going to have a cash shortfall. So that is something that we want to watch. We want to hopefully see in 2025 that the company generates annual EBITDA of at least $448 million so that we know that the core business is able to service the debt. Under the umbrella of what I'm going to call profitability, but it's actually cash flow metrics, we have operating cash flow and free cash flow. We talked about them a little bit on yesterday's video. Operating cash flow, we want to see positive, and it is almost there. Maybe this year with the bigger box office, AMC gets to positive operating cash flow so that we know that the operations are covering all of the costs of the business. Free cash flow is another metric that we track that encompasses not only the operating cash flow, but the additional cash that the company spends on CapEx. In 2024, AMC spent $245 million of additional cash on CapEx, maintaining and upgrading facilities and equipment. And so not only do you have negative $50 million from operating cash flow, you got to add that $245 million spent on CapEx, we get a negative around $296 million of free cash flow. Obviously, we'd like the business to throw off enough cash to not only pay all the bills, but pay for CapEx too. And that's why we want to see both of these numbers in a positive situation. And the only way that is going to happen is by revenue growing. I observed many of you guys on social media complaining about Cinemark, so I thought it might be just interesting to compare their cash flows, and they are well in the positive on both operating cash flow and free cash flow. Some other metrics that we look at when we consider profitability would be any of the profitability margins. And for the moment, on a lower box office like 2024, AMC is still negative on a lot of these profit margin measurements. Cinemark is positive. So if you are struggling with understanding why AMC is being held down and Cinemark is doing just fine, it's a lot to do with profitability, both in cash flow and these profitability ratios. Looking now at debt and liquidity and thinking back again to the orange quote on the screen here, what Adam Aron said in the conference call last week, earlier this week anyways, he said, "We're still not where we need to ultimately be, but real progress has been and is being made." Let's take a look at the total long-term debt. It has decreased from 2020 by 29.5%, or a decrease of $1.7 billion. Long-term debt now at $4.01 billion and lower than it was pre-pandemic, lower than 2018 or 2019. In fact, lower than it was in 2017 as well. I see a lot of people saying he hasn't paid off any of the debt. I don't know what these people are talking about. I mean, clearly the debt is being paid off. Yes, it's being paid off with equity raises, but to say that no progress has been made on the debt would not be a true statement. The bulk of these debt maturities that you see left on the screen here, $4 billion, have mostly been pushed to 2029 and 2030 with the debt restructuring that was done in the middle of 2024. So I don't know, what their priorities are going to be. In 2025, we have $65 million worth of principal and interest payments maturing in the middle of the year. That does need to be addressed, and they will need cash for that, $65 million on top of operating the business and CapEx. But beyond that, are they going to need additional liquidity? I can't tell you that. That is a management decision. Of more importance to me right now in the short term, this is to me, is that the company addresses the working capital. That is the current assets minus the current liabilities, or their ability to have enough cash to pay the bills over the next 12 months. And that is still a negative number, and that only gets fixed by putting more cash on the balance sheet, either from raising cash through equity raises or generating cash through operations, getting back to that cash flow that we talked about just a minute ago. Comparing again to Cinemark, you can see that they have a healthy positive working capital when it's contrasted to AMC, way in the negative. And this is not something for you guys as investors to ignore. And I can guarantee the company is not ignoring this. You guys know, if you're an investor in AMC, there are a lot of people that are pounding the drums every day saying this company is going to fail because the debt is so big. But is debt really the issue? I mean, Cinemark has a lot of debt. AMC has a lot of debt. Cinemark is doing just fine. Why? Because it's more important, the market cares more about profitability and free cash flow than they do a company's total debt. Do not let people mislead you that total debt is the issue. The ability to generate profits and service that debt, profitability, free cash flow, those are what you need to be primarily focused on. Don't let them distract you with total debt. I'm not trying to minimize it, but it's not as big a deal as some of these naysayers out there make it out to be. What evidence could we look at to see if what I'm telling you is true? We could look at leverage ratios like AMC's debt to equity ratio, negative 4.7. Would you believe that Cinemark is in even worse shape with a debt to equity ratio of negative 5.73? But their stock price is doing just fine. Why? Because they are profitable and they have free cash flow. Those are the two main things that I'm looking at, not total debt, profitability, free cash flow. If you guys have been following me, you know that I stepped out of the play in November because I forecasted a December dilution event, and there's a couple of other risk factors that I'm watching for in the short term before I decide to re-enter any speculative trade on AMC. But I can tell you that over the past few months and over the next several months, as I make my decision or not to get back into the trade, these are the things that I'm going to be watching. Box office, the number of films that are being released per quarter for the year, AMC's revenue, AMC's profitability, free cash flow, and working capital. Now, some of these are short-term fixes. Some of them are longer-term fixes, like working capital. That's not going to be solved in a quarter, but the company could have enough revenue to be profitable in Q2 or Q3 or Q4, almost certainly Q4. So this, on my channel and for myself, any trading decision that I might make for AMC, these are the only things that you're going to hear me talking about for the rest of this year. If you have other hot button items for AMC that you really care about, that you're passionate about when you decide whether or not to invest in this stock, you know, for some of you it has to do with shorts or FTDs. I'm not going to be covering that on this channel. And since mid-2022, when AMC ran out of shares and ran out of cash, I've had the focus of this channel laser focused on fundamentals since mid-2022. And that will continue to be what I focus on in 2025. If you guys have any questions or comments, please feel free to drop them below. I'd love to hear from you guys. I want to thank you for watching all the way through. I hope you learned something that you can take away and help you in your decision process for 2025. When I decide to buy AMC again, I will let you know. Like I said, there's a couple of short-term things that I'm watching and waiting for answers on. Maybe we get those soon. I don't know. But thank you again for watching all the way through. I'm Tony Denaro, and I will see you on the next video.